All right, Lance. Welcome back to Face.
Hey, how's it going?
Good, buddy. How are you? You remember how to share a screen here?
I'm doing it right now.
Good memory. All right. So, we haven't talked in a while, and a lot of things have happened. You want to start here with what are we looking at here? GDX.
Let's see here. Yeah, that's what I had on there at first. Yeah, last time we talked, I believe it was in early August,
Yeah.
and we basically had gold gone into a blow off at that
Right.
time, or at least what I thought was a blow off, and then it terminated. And this has basically happened. You're up 9 weeks straight. This has happened 3 other times in history. This being the fourth. And of the prior three, gold was lower 1 month, 3 months, and 6 months later. And so
Okay.
far, we are lower 1 month and looking to be lower 3 months later, and probably 6 months as well.
Okay. A lot of people are saying we have a breakout. You're going to view this as just another. I mean, the whole process here since the highs, Lance, looks corrective. Yeah,
Yes.
you're blowing off, and then we've gone into this chop fest here in gold. I'm thinking like 1940 to 60 may be a decent sell point, but actually, my preferred short is going to be silver based upon what I see in the gold silver ratio. Do you follow that for preferred longs and shorts? The gold silver ratio when it's going down, your preferred long silver, and if it's going up, your preferred long is gold.
I mean, typically when you're in a rally in the precious metals, silver is going to outperform. That's true, and same to the downside when you're in a cyclical bear or a secular bear. But that's just kind of one component of what I look at.
Okay.
I guess what strikes me more right now is that back up here, the net short position commercials, we are roughly equal to that now, even as gold is about $50 lower. So commercials are as short now as they were right up in here.
Okay.
And as you know, they're typically right.
They typically can take more heat than us too. They're
Yes,
deeper
exactly.
pockets.
And we also, interestingly enough, just even this morning, the dollar index, the gold and the dollar have been, get to the chart here. That's not the one I want.
There was a big move up in the yen today. Do you know what was behind it? And
No, I don't. We've been moving around on a lot of this stimulus stuff. Interestingly enough, Europe is down about 1%, even though the S&Ps are indicated a little higher. But I mean, this, versus the dollar for the last, I'd say 2 months, basically, gold, the S&Ps, everything has been
binary,
all one trade. Versus the dollar. Even again this morning, this dollar index doesn't show this morning's activity, but you've broken below 93. Oddly enough, gold has not been able to surpass this peak right up here, even as the dollar index has broken down that, below that prior low. So you got a slight divergence there. But should the S&Ps, turn over after the open, let's call it on stimulus disappointment, because there is no deal once again. The dollar's probably going to rally. Gold's probably going to reverse. We go back into this game again.
So what do you do when the market's in a position like this? You have no commitment to gold-related assets, and you're just trying to be patient, like Tom Petty says, waiting is the hardest part.
Right. Well, I think I instant messaged you back up in here. I was short and I covered, and then I put it out again, in GDX via dust around in here, and I took it off again, and I'm
trading it.
Yeah, I'm just trading it because, like I said, I think odds are you're going to head lower into the election, and the one thing with everybody talks about QE being inflationary, unless you have a transmission mechanism, that being the government sending out checks, what have you, stimulus that the Fed is directly going to finance, all that money just stacks up at the banks as the Fed buys those bonds, because the banks aren't lending. So it's not getting out of the real economy. And if Biden does win the election, which looks probable, you're not going to have a stimulus package until probably February. And so you're going to be in this intervening period where you're going to see, probably deflationary forces, bankruptcies, all kinds of bad things between now and early next year. And, probably the Fed's going to be forced to come back in with QE either in November, additional QE, or December. And if gold's sold off enough and it's sold out, it can actually, it can go ahead and turn, and that could be the catalyst to potentially turn it. But my guess is you're going to be somewhere down in here before you eventually turn back to the upside.
So under 1800, right around that.
Right around it. I mean, you never know these things until after the fact, but that's just a guess at the moment. I mean, I think that seems, like I said, last time commercials were roughly the same. They're about as short now as they were back up here. You overlay this a similar decline, and it points at around 1800. And there's chart reasons to think you could bottom there also, but until you get there, you don't really know, to be honest.
Okay. What else is on your radar?
It's just here in the short term. The GDX GLD ratio has broken its uptrend. The silver stocks versus silver, look even worse since they basically peaked back in May, and they continue to underperform the metal, which usually is not a great sign either, and just kind of reinforces the fact that you're likely still you're still in a corrective phase. I know everybody's been a lot of people have been very bullish since then, since we peaked, but I think that's a little misplaced, a little early. And my model too is not anywhere. Well, I say that it's not anywhere close to a buy. If you were to have a severe breakdown and get a sell-off over several days in gold, like what I've described, it could potentially flash a buy that it hasn't done since March. But at the moment, it's not even close.
Okay, so that's an interesting look. I ascribe to that belief too, that the shares lead the underlying commodity. And I noticed when gold was going parabolic that the miners really were underperforming near the top, and they still seem to be, so there's a visual of what it felt like to me. So, okay. So we have time to buy the shares. I interviewed someone that likes that ETF on weakness, SILJ, which are the junior silver. Yeah, you follow those?
I do, not extremely closely, but
doesn't look
real. They're all going to move together.
What's that?
I said they're all going to move together.
Okay.
They're all going to continue to correct, or they're all going to turn. One doesn't go up and the other ones continue to go down. I mean, there is reason to believe that the juniors would, potentially outperform on a new leg up, given that you're well into this. Going on, since March? How many months is that?
Are you a long-term dollar bull, long-term dollar bear, Lance? Which are you? Because there are two camps.
I'm a long-term dollar bear, but at the moment, given that virtually I was listening to your prior guest that couldn't think of any possible reason for the dollar to go up, and I think that's kind of where everybody is at the moment. A lot of the sentiment data and certainly the commitments of traders data has the market very short the dollar, not as short as they were 3 weeks ago, but still very short. And
you mean the commercials in euro and cable, or the dollar?
I mean specs very short euro. Very short the dollar versus the euro.
Okay, large or small specs?
Large.
Okay, so the funds are short the dollar.
The funds, So the funds that you've had very big bets against the dollar, and they haven't been working over the last couple months as the dollar put in its low back in September.
Right.
And versus the index, and versus a lot of the major currencies as well.
Yeah, I'm looking for that low to hold above, I'm looking for a buy round. I put a piece on today. It's 92.65. I'll try another piece around 35, and I'm wrong under the low. And then if we have equality from the last dollar pop, which was, I think, about 300 points, that would take us up to 95.5, 96 in the Dixie.
Mhm.
So
That's kind of what I mean. I think a bear market rally is to be expected here, and that fits with precious
the
metals.
gold, yeah,
Uh-huh.
and a
Interesting.
correction in stocks maybe, and just,
Exactly. And
yeah. So
corresponding
the
to that
dollar
signal.
turns up, will create pressure in most instruments.
Correct. Yeah,
Maybe
and
not bonds.
oddly enough, here, this is an hourly chart of the DXY. You've got a bullish divergence here I've been watching this on the RSI, where you hit
Yeah.
this low back here. The dollar index has plunged today, yet RSI is not confirming with new lows. So
Yeah.
it'd be interesting. I said it'll be interesting to see even today what happens after the open. If the S&Ps do reverse, you're going to see this move up.
Yeah,
That's just the nature of the beast.
I renamed RSI. Do you know what I renamed it to?
What'd you rename it to?
You're a great straight man. The real simple implicator.
I
You like that?
like
Yeah.
that.
All right. Well, don't use it in Scrabble because you won't find it in the dictionary. Implicator. Okay. I don't think it's a word. I don't know why it wouldn't be. To me,
Why
it's
not?
something that implies something. So, yeah, that's an interesting look there on the dollar. You do anything with the stock indexes, or you're really precious metal focused on your fund, aren't you, Lance?
I really am. I don't really move too far outside of my sandbox. Gold's hard enough as it is, and
Yeah. There's nothing, I bring up this example when I talk to people who are, trading a lot of different instruments, that I knew guys on the floor at the CME that never left one trading pit their whole career,
mhm.
and that they knew it like the back of their hand. And, I actually think being focused on, just one area makes you an expert instead of a jack of all trades. So, nothing wrong with finding what fits your personality. As Jack Schwager said, you have to find a trading style that fits your personality. I bet it wasn't always this way for you. I bet you used to be all over the board.
Years ago I was. Yeah, I've become
Yeah.
definitely more focused within the last 10 years in gold and gold equities.
You have any, there's a lot of banter around digital currencies. Even Paul said he's going to take a look at it, and central banks are taking a look at it. Do you think that's that's part of the war on cash, to have everything digitized, so you really know where every transaction, every uh,
For tracking purposes.
deposit, yeah. Do you think we're going that way
Uh,
eventually?
it, it does seem that way, doesn't it?
Yeah,
Uh, I think that's highly probable. And then I'm definitely a Bitcoin fan.
you are. Okay.
Yes.
Okay. Do you trade it, or you're one of those hodls?
With Bitcoin, I kind of treat it like a savings account. I just buy a little bit every now and then and just kind of put it away, and that's what I do with it.
Okay. Putting in a pretty good day today.
It is. Yes, it is.
Yeah. The news, what PayPal's going to be accepting.
Accepting payment. Yes.
Yeah.
Another brick in the
Okay.
wall.
Okay. So you have a view on prices. You just believe in the story of blockchain and Bitcoin.
I just think over time, it's likely to see as people move away from fiat currencies, it's going to be one bucket that they go to, and just part of the mistrust of fiat currencies that's been building for years with what central banks have been doing.
Let me ask you this: do you tell people to hold physical metal besides trading ETFs and shares, and that way of approaching gold? What's your view on physical possession of precious metals?
I don't think it's necessary unless you think really bad things are going to happen politically in the nation where you reside. But if you
So
think
tell me why you're optimistic about the U.S.
uh, you know, the U.S. has lots of natural resources. The United States is a very wealthy country. I don't see that changing anytime soon. Certainly, we can make a lot of mistakes and depreciate the currency and cause all sorts of problems for the dollar, which is going to increase the value of gold. But I don't see the demise of the United States coming anytime soon.
Okay. Does COVID play in? We're wealthy but broke. ForexAnalytix just wrote. So
Well,
fiscally, we're broke.
right. The beauty of that is as long as people or the rest of the world is stupid enough to continue to accept green pieces of paper for payment, that's a pretty good world to live in. And for right now, they're still accepting it, oddly enough.
Okay. I wonder what it'll be like, say, the Dixie goes to 50 during a huge bear market. And really, when you think about it, Lance, the area that you're in could be the right area because isn't the dollar the easiest thing to be a sacrificial lamb to get out of or at least ameliorate the debt that we're accumulating? Be kind of invisible. A lot of people haven't noticed it's already lost 90% of its value. So,
True.
another 50% haircut from here will be noticed in grocery stores and everything we need to live on. But, for the most part, it would be like an invisible inflationary depression. That's kind of the way I think we're going to. Don't you think that the Fed is going to achieve their target and be careful what they wish for about trying to get inflation up to 2%?
I think eventually they will, but I think it's almost kind of an all or nothing. You can't get a little bit pregnant. I don't think they're going to be able to create just a little bit of inflation. Either you're going to continue to see deflation or a lot of inflation overnight. And
What's a catalyst for both of those scenarios? The
the
dollar.
that's more than likely it's going to be a big component of it. And
Okay.
how all this plays out, we will have to see. But I go back to QE in and of itself is deflationary and unless you get Congress sending out digital checks, ACHing into everybody's account, and I'm not talking just one round of checks like we had back in whatever month that was.
You're talking universal income.
It's got to be something really insane, and I'm sure they'll do it eventually. I mean, if push comes to shove, the back's against the wall, that's what will happen. But and I don't think it'll. I mean, I think this will happen in other places in the world too. So you may not see it just in the dollar because the dollars versus other pieces of paper. You may just see it in gold versus the other pieces of paper in Bitcoin and
Right.
commodities and other hard assets.
How's your fund doing year to date?
Up about 35%.
Okay, nice, good job. And is it only for accredited investors?
We actually, yes.
Okay. All right. And what are those? They've changed those qualifications. What is it? $1 million net worth outside of your house?
It's actually it's qualified is what it's called now. It's kind of a step above accredited. You've got to have a net worth of 2 million or $1 million with me, and that's excluding your residence. And there's a bunch of different qualifications.
Okay. Well, I'm going to start saving up, and I'll be with you in about 10 years.
Awesome.
All right. All right. You want to show your website or anything, so that people know how to get a hold of you and reach you? There's probably a couple of viewers that might qualify for that. And do you put out anything that, say, a retail trader would want to follow? Like I know you follow commercial traders. So we have someone in here said that he qualifies. What's the best way for people to get a hold of you, Lance?
Yeah, well, I mean, my website's here on the screen, dailymarketsummary.com, and it's available to anybody to
I'm still
subscribe.
seeing your charts. I'm
Oh,
not
okay.
seeing,
Oh, you know why? That's because it didn't.
yeah, new share.
New share. How do I do that?
You just click pause. No, you click new share.
Stop
Yeah, there you
share.
go.
Share screen. And aha.
And when I was raising
See it
money
now?
for, yeah, got it. So when I was raising money for CTAs, the most important part for me was what was the worst drawdown. Okay,
Mhm.
so that tells me how they handle things when things aren't going well. So what's been your worst drawdown since you've been managing this fund?
In 2013, I was down about 50% because I did not recognize the bear market that was underway in gold, and
Okay,
that was a really bad year. You know, the good news was I was up about 30% the next year, and I was up 150% in 2015. So I turned it around rather quickly, but
okay.
that was a big
What
misstep.
was and what was your mistake? Risk management, being stubborn, adding to a losing position.
Uh,
Let's do a
gold.
post-mortem on that.
Yeah, yeah. At the time, gold had been in a long-term bull market since 2000. I was long only, and to be real honest, I didn't see it coming. We had QE3 at the time, which you would have
Yeah,
thought would have been inflationary. Which is, I mean, this is why experience has taught me a lot. People assume just because we've got QE that gold's got to go up and you've got to get inflation. Well. QE3 was done in 2013 and gold had one of its worst years ever. So that needs to be remembered. It's not that those two don't go hand in hand. But after 2013, I turned long short, and that's why performance has gotten so much better too.
well, you know what? You're not really successful until you have to weather adversity and come back from adversity. And congratulations on that. And thanks for hanging out with us and giving us some views about still being patient, waiting for better entries in the metals and the shares. And hope that you know, I won't use that, term that our president used, turn the corner. I just hope you have a great fall and winter trading season and bring home those results or even exceed where you stand today, Lance. I wish you all the best. I root for you.
I appreciate it.
All right, buddy. So
All right.
Lance Lewis, everybody, anything you want to wrap it with, Lance? Anything you want
No,
to?
I think we've covered all the bases.
Okay, so there's Lance's market letter. How often do you publish it, update it?
That's every day after the
Every
close.
day. Okay. And that's free to anyone that wants to come and read it, huh?
Well, Nick, you've got to subscribe to read the
Oh,
daily piece, and there's intraday. I post up intraday comments as well,
okay.
and free trials available.
Okay. So www.dailymarketsummary.com. Free trial, 1 month for $100.
No, the
Okay.
free trials for 5 days. It doesn't
I
cost a dime.
see. Okay. Reasonable. Thank you for your time, Lance. Good luck. Good hunting, my trading warrior brother. And thank you for coming here today and sharing your insight, knowledge, wisdom with us. Appreciate it.
All right, take it easy, Dale.
All right, Lance. Lance Lewis, everyone, that's a wrap. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Good hunting the rest of the day. You're welcome, Laura, Coyote, Monica. See you guys.